And Tesla Motors shares zipping higher on Tuesday, erasing some of the losses over the previous two sessions. This came ahead of the electric car maker's annual shareholder meeting in Mountain View, California. And joining us now with a closer look at what is helping Tesla fire on all cylinders is Antony Currie. He's written about the company extensively as associate editor at Reuters Breakingviews. And joining us live from Watertown, Massachusetts, Timothy Lutts, the president and chief investment strategist at Cabot Heritage Corporation. Gentlemen, thank you both for joining us tonight.
Thanks for having us on.
Antony, we're going to start off with you in the studio. Hi there. We're going to start off with Antony in the studio. What was the main takeaway from the shareholders meeting?
Well, it was a bit of a glad fest, really. Everyone's really happy where the stock's gone. It's up almost, it's got almost 3 times so far this year. It's fallen back a bit from its highs. There were a couple of investors sort of joshing with Elon Musk, the CEO, saying, look, is there any incentive schemes for buyers of your product to sell products to their friends? Because we all do it. And Elon Musk said, well, that's not a bad idea. But frankly, investors think this company's
like a reward program?
Exactly. So if you buy a Tesla and you then tell your friend to buy one,
like a gym membership.
Exactly.
Okay.
Why not? So, but otherwise, it was very calm. I mean, that no investors put forward any proposals to be voted on. It was all very plain sailing for the company.
No major breaking news.
No.
Which brings us to the question of, is the stock overhyped at this stage? There have been a couple of announcements lately and a big short squeeze, which, as we've said, has sent the share up 180% so far. Overhyped, underhyped, fair value?
I think on the stock, it's overhyped. I think Tesla's a great company. They've done a great job. Look, we're 5 or 6 years since they produced their first ever car. They've got a great car coming out now, the Model S, which has won awards galore. It's got one of the highest ratings from Consumer Reports, actually the highest rating ever. And they've got the basis for the next 2 models that are coming out. All is running pretty well. They've raised money way more than they thought a couple of weeks ago. It's fantastic. The problem is this company, it's a growth company, but it's still an automaker. If you drill down into the basics of this company, the most important metric is going to be pre-tax earnings. And this company is probably never going to make more than 11 or 12% pre-tax. And that's the same as Ford's going to go for, as Porsche. No one's going to get, none of these companies, including Tesla, is ever going to get the kinds of mid-20s, high-20s multiples that you see at Apple or Google. So at that level, it's looking way overpriced.
All right, I want to bring in Tim over here. Tim, what do you think? You're an owner of the stock, and you think it still has room to go?
I'll disagree with Anthony, because this is the first new automaker the U.S. has had that succeeded in over a century. It's time for these kind of multiples for automakers again, because it's a new way of making cars. And we haven't seen a great bull market and growth stocks for over a decade. People forget what these multiples can do. I would say it isn't overhyped today, but it is overbought short term. But I would say long term, I like it a lot. And I would be a buyer here looking out multiple years.
Well, Tim, the valuation doesn't really pencil out if you compare Tesla versus other companies. Tesla has an 11 billion market cap. It's greater than Fiat's, and it's about a quarter of GM's. How do you reconcile that? I mean, GM reported 65 times more revenue than Tesla.
But it's not about accounting, it's about perception. And right now, what makes stocks go up is people perceiving the future to be better. Right now, consider Facebook. Came public last year. It's a great company, but people loved it when it came out, and since then the stock is down. Tesla isn't loved yet. Tesla is not loved by a lot of people, including the engineer here in my studio. And so there's lots of potential buyers of Tesla as they become to know the cars and the stock better. That's the future.
Tim, I'd agree with you on that. I think the issue is that they still have to sell a certain amount of cars, and they're going to get nowhere near enough cars to make up for the multiples they're getting at the moment. I mean, at $194 a share.
In the short term, you're right, but in the long term...
Well, what's the long term for you? I mean, I think long term you're looking at 7, 8, 9 years. But the investors never look that far ahead. Come on, no institutional investor looks ahead 7 or 8 or 9 years. All institutional investors, if they see this price and they think, look, in 4 or 5 years this company's going to be making, you know, $1 billion maximum, they're going to sell now because this price is fantastic for these people.
Let's take it away from the stock for a minute. Tim, let's take it away from the stock for a minute, and let's focus on gross margin. Tesla set its own goal of 25% gross margin by the end of the year. Considering its volumes have been quite low, Tim, do you think that's attainable?
I think what's potential here is whatever Elon Musk wants to do. There are potential partnership deals, licensing deals. They may set the standard for supercharger recharging for electric cars. And that's almost an expense-free business. So no one knows what can happen next. That's the excitement here.
I'd agree on that. I think one of the best things they've got going for them is the technology. But I think back to what happens to the gross margin. I think they can get that. He says that we can get that just on selling the cars we've got. The issue is, though, that gross margin doesn't include sales, administration, research and development. And that's why, as interesting as the gross margin is, the pre-tax margin is the thing to look at.
Well, there have been a couple of lawsuits against Tesla by car dealers because so far Tesla has been selling directly to the public.
Right.
And the Association of Car Dealers is not happy with that. So that's going to affect the price if they have to now give profits over to the car dealers.
I'd say, sorry,
One of the
Tim,
things
go
that
ahead.
surprised me today, in today's presentation by Musk, I was most surprised by his emotional response to that issue. He's really upset because Americans want to buy cars directly from manufacturers. More than 85% of Americans don't want to buy through dealers. And yet the dealers have a political stranglehold on the business. And so if we can remove that, that's huge for companies like Tesla.
Very quickly, guys, they're saying that Tesla needs to produce a lower priced vehicle to really expand sales, especially in emerging markets like China. What are the prospects of that happening anytime soon? Tim, we're going to start with you and end off with Antony.
Looks like it's about 4 or 5 years out.
4 or 5 years out, but a possibility, Antony.
I think they might try and get in China a bit earlier,
it's
but
guaranteed.
they've got to get through a lot of hurdles. Yeah, they'll definitely get. China's going to be a great market. It's a perfect market for Tesla.
And what about these supercharging stations that they're putting out around the country? How's that going to impact
Well,
things?
we'll soon find out. Elon Musk says he's going to take his family all the way across from LA to New York at the end of the year when all the stations are in place. If that fails, he's going to have a lot of egg on his face.
Yeah, well, a lot of people have range anxiety, as we know, with electric cars, fearing that they may not be able to charge them along the way. We'll see how those supercharged stations pan out. Thank you so much.
Pleasure.
Antony Currie, Associate Editor at Reuters Breakingviews, and Timothy Lutts joining us from Massachusetts, President and Chief Investment Strategist at Cabot Heritage Corporation. We're going to have to leave it there.